Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day as always out there. Today, we're going to be looking at Altria, which is a subscriber request. Now, we're going to be highlighting some key points here for Altria. First thing I want to highlight is that 44.04 PE ratio is a bit misleading there. A lot of one-time expenses or non-cash items. Again, we're looking at GAAP. That is a GAAP measure. Well, that specifically is using GAAP measures. And dividend yield of 8.78% is more than likely why people are actually interested in this company right now. Now, the company is down 34.17%, but that shouldn't really deter us as investors. As kind of another case study within the portfolio, look at Cardinal Health. Cardinal Health is one that when we were buying, even though the 5 years looks terrible, we've done really well on it since we've purchased it. And that was a purchase in late 2021. So I won't be talking about that one in this one, but there's actually something that's fairly similar to what happened to Altria as what happened to Cardinal Health with a master settlement agreement. We'll get right back to that, I promise. But first, I want to talk about what is Altria. So Altria is the domestic version of Philip Morris, ticker symbol PM. If you haven't checked that one out, go check that one out as well. So they sell cigarettes and cigarette-related products under the brands like Marlboro. You might have known or heard of that one. And one thing they have to contend with is the following. Take a look at this. So a decline in smoking rates over a period of time, going up to 2019, going back to 1965. Okay, so this is important because, okay, what is happening? Well, we're seeing a decline in the usage of their products. It kind of peaked out in 1965, so I want to actually give you guys that bit of nuance there. If I show you this chart, it gives you a better story. So you can see the massive rapid growth of consumption in tobacco going back to the early 1900s. And now it's again peaked in about the 1960s, and it's been coming down ever since. So one thing this enterprise or this sector has had to do is kind of combat this with raising the prices over time. And if you guys recall to your microeconomics class, you might remember the following words: inelastic demand. Okay, well, what is that? How does that relate to this? Well, cigarettes is often used as an example in a classroom setting and such as that to test the theory of inelastic demand. So I'll show you this chart here because I think it illustrates it really well. Inelastic demand is the change in price leads to a smaller percentage change in demand. What you kind of get from that is consumers are less sensitive to price increases. And this could be because the product itself is of great need. It might be a necessity. Think of energy or oil price. Well, you need to fill up your car and you got to spend the money. Prices rise, you got to drive somewhere, you got to drive to work, otherwise you can't do anything. So you're going to be more likely to be less price sensitive to that. Well, cigarettes have an addictive factor that we can't really, well, we can measure, but we see that in the demand curve. We see it as an inelastic demand curve, which means consumers are less sensitive to the change in price, which has allowed these companies to kind of offset the declining volumes with instead looking at that rising prices. And one thing to note about the branding of Altria is they command some of the best brands in the world of the cigarette space. Okay, so that branding power, so to speak, has allowed them to even circumvent that issue a little bit better than some of the lower quality brands in this space. Okay, and if you are one who consumes these products, you might attest to how expensive they are and how difficult it might be to get off of them, and if you might have a family member themselves. So again, I can understand how a lot of people are kind of put off in a more moralistic standpoint. I'm just viewing this from simply just the numbers. Okay, so taking a look at some other things, I did mention the master settlement agreement that was very similar to something we talked about way back when we were acquiring Cardinal Health. And if we recall, that was actually shown in those videos, but here's a little bit about it. So the companies agreed to pay $365 billion. Now, before you think that was all in 1 year, well, very similar to the one that Cardinal Health struck with McKesson, AmerisourceBergen, and others, it was over the course of period of time. So it was spaced out, and I think it was for the course of 25 years. Actually, yes, you can see down here, $368.5 billion over 25 years, starting in 1998. Okay, that was the strike of the agreement. So now it has ended, by the way, if you guys didn't know, and this actually then was, let's say, stream of cash flows that were being paid out by the companies that they no longer are paying out because the agreement has been settled. A lot of this was to pay for the costs on the healthcare system. That was what it was basically about. Now, taking a look at some other key parts that you might want to be paying attention to with Altria is their investment and ownership stake in Juul. You might remember this from 2018. The market didn't like it back then. If you guys are new to the markets and you're just kind of finding out about this, well, back then I can tell you in 2018, the market was not too happy with Altria doing this because their balance sheet was actually pretty good. And by the way, there's another one they bought that I will be talking about here, but many people might not know too much about that one either. And that is with Kronos Group, which is something having to do with the, let's say, other substances, okay? But we'll talk about Kronos Group as well. But the one I want to focus on more is Juul, because the previous CEO did a bit of an oopsie by putting in a decent chunk of change, let's just say that. And the amount you could say is now, well, we'll go to this story because I think this story encapsulates what happened beautifully. Altria invested $13 billion in Juul. As the U.S. moves to ban e-cigarettes, their value has gone up in smoke. I love the pun there. But yes, Juul has in fact gone down in value. Of course, it's not publicly traded, but we'll see how they accounted for this because that's kind of important. It was a non-taxable event. It's not an actual expense. It's important to keep that in mind. But they basically just grabbed shareholder money and burned it. And also, if you guys were not investing back in those days, just a little tidbit about Altria, their balance sheet was actually really good, okay? Really good. It's still not terrible, but it's nowhere near as good as it was back then. Back then, it was really, really good. This move really hampered down on Altria's balance sheet. I'll tell you that right now. And that's a shame because from the business perspective, because as we're going to actually see and investigate with Altria, they have very limited ability or very limited maneuverability. And depending on your perspective as an investor, that might be problematic, okay? And we'll talk about why they don't have much room to maneuver, and it has a lot to do with their dividend. But we'll get to that in just a second. So now, of course, we want to actually go over to their presentation first to kind of get an idea of what the company's trying to highlight to us as prospective investors. Now, something that we want to look at, the consumer price index that they were trying to show us. Of course, they're highlighting that there has been a decent amount of inflation. All of you know that. And also looking at the weekly retail gasoline prices. So that's an interesting bit of a new tidbit that they're kind of adding in there. And why is that important? Well, a lot of the contribution to price increases has been from energy. Energy is the bedrock, the base of everything. And as we talked about on this channel, there are the effects that something will have on discretionary spending. What is that? The price and cost of necessities. Necessities are the primal, the necessary expenses. And then after those expenses, well, then we can focus on the discretionary. Okay, I want that extra TV. I want that, car. I don't know. Whatever it is that you might like, that you might want to acquire in addition to your necessities, such as energy, housing, and food, well, then, and then gasoline prices, well, that's energy. That's a necessity. And that means more money maybe to indulge. Maybe you buy another pack of cigarettes. That's kind of what I'm getting at there. But that's why they're, again, highlighting this part. And then we see cigarette volume sales per trip, because what this also tells us is, where do we buy cigarettes from? Well, I'm not a smoker, but when I go to these, well, I don't go there anymore because I actually don't need gasoline. But when people need gasoline, they might go into the store occasionally. And what do they do at the store? Well, you'll see a massive array of cigarette products, of tobacco products. And so just like how Walgreens had the advantage of, let's say, the vaccinations, and it drew store traffic, that was a benefit to their in-store sales. Well, and also being a pharmacy where you go to the pharmacy is also, yet again, a benefit to the movement and the volume of the store. So more people going to the gas station benefits Altria because it increases the amount of times a potential customer is walking in front of their products. So that's again why they're caring about that. And they're seeing the cigarette volumes sales per trip in packs. You can see the discount segment and the premium segment. Well, in the premium segment, what do we see versus the discount segment? We see an increase, an uptick in such a thing. So we want to pay attention to that. But in 2022, we do see a bit of a decline relative, but an increase in the premium segment in 2022. Okay, so relative to previous years, so it's a year-over-year example. And then adult tobacco, 21 plus brand loyalty. Again, I've said that Altria has one of the better brands. It's one of their strengths. Marlboro retail share within the United States, which all we care about is the United States for Altria. Again, if you're looking at international statistics for Marlboro, you're really doing yourself a disservice if you're looking at Altria. And then if you're looking at Philip Morris, don't look at the United States statistics. The company will do a good job at not showing you that because it's not pertinent to the investment. You shouldn't care at all because they don't sell any cigarettes within the United States. Okay. So kind of similar to the agreement or the nuances I talk about with Anheuser-Busch, which we're going to get to actually in this video, and something like Constellation Brands. Now, going over to this company, we see wage growth by occupation. Why is this important? Well, again, statistically, there are certain occupations that consume tobacco products more than others. And you guys might have some ideas of which ones those might be. But yes, in all sense, they're kind of highlighting there's a reason why a lot of these are here. A lot of the consumers here are actually have a greater propensity to consume their products. And why do we care about their wage growth? Well, wage growth increases the capability for said consumer to purchase your product, which is a bit of something that I care about. And we've been talking about that with discretionary spend. Well, if wages aren't moving too much, but necessity spend or necessity costs are rising, that puts pressure on discretionary spend. Discretionary spend pressure then puts pressure basically on everything downstream from that. Okay, so combustible regulatory update. So we're going to see the words combustible, non-combustible products here and there. Combustible, think traditional cigarette, you light it up. And then non-combustible, think vapor. Or IQOS, which we'll actually probably see mentioned here. But they are working with regulators. Oftentimes, these companies do work really strong with regulators, so keep that in mind. And then we do see, again, if you go through their website, they're going to say how they try to do harm reduction and all that jazz. So percent of adults who support the concept of tobacco harm reduction. I think, of course, everyone thinks that. But yeah, so that's like a pat on the back slide. Yes, Altria also has pat on the back slides. Oral nicotine, we do know that this is, of course, kind of downstream from cigarette or tobacco consumption, and it's just another way to kind of consume or get that same feeling, let's say. And increased awareness awareness and trial and repurchases. And so this is, again, some of their products that they are selling, and they're kind of breaking down their various products, okay, because they do also offer these products. Now, here's Juul, the infamous Juul. In the second quarter, June products receive a marketing denial orders, MDOs, earlier this month. Okay, so basically, again, just Juul investment was money just thrown into the fire. We recorded a second quarter non-cash pre-tax unrealized loss of $1.2 billion as a result of the decrease in the estimated fair value of our investment. So I told you guys we're going to talk about how they record for that loss. Again, it's a non-taxable loss. It's not realized, but we're recording it at fair value, and the company gives us updates along the way. So basically what that's telling us is that they have been writing off the investment into this company. Again, the best way I can say it is they grabbed $13 billion and they threw it into a proverbial fire. That's what happened. And if you're buying it now, you're buying it after the fact. But if you were an investor back then, you were probably pretty upset. Also, your position hasn't done well since then, but you're probably pretty upset, okay? And fair enough, you should be upset, okay? Before we continue to there, we want to talk about the e-vapor category volume, and we do see that we have PMTA authorized is about 1%, and then the balance is about 99%. Okay, so that includes products that have an MDO, which basically means they can't market. But yeah, just want to highlight that for you guys there. Now, smokable segment and total industry, we are seeing still, again, a decline in the smokable segment and a decline in the total industry. Now, there is a thesis I've been hearing around being talked about that if a recession were to hit, a lot of these guilty products, so to speak, would do better. Maybe that's the case. Maybe that's true. I don't know. That's for you guys to decide, but I just wanted to talk about it, mention that, that's out there. And then we do, again, see the retail share. Marlboro is pretty consistent with this. I honestly have never seen it below 40 ever. So, yeah, it's pretty consistent. I'm saying going back almost 10-ish years, I've never seen it. Now, Marlboro shared premium segment. Again, they separate the total segment and the premium segment. Marlboro is a more expensive brand among the cigarette products, but yeah, that's pretty much it that I want to cover. And then we have deep discount, branded discount, and I think that's pretty much what we're all going to cover. I wanted to see if they were showing their own statistics for cigarette consumption. It doesn't appear as though I found it, but it is what it is. We shall move on to the valuation. I think it's important, one quick final time, to highlight some of the well, we're going all the way back to the fourth quarter report of 2018. Just talking again about Juul. They invested $12.8 billion investment in Juul, representing a 35% interest in the company. And now if they grab that money, they could probably bought the entire company outright at this point. But wow, what a blunder. Just again, highlighting, just terrible. Okay, so Altria financed the Juul transaction through a $14.6 billion term loan facility arranged by JP Morgan Chase. Those investment bankers right there, they made out like bandits. $1.8 billion of credit facility remains undrawn and may be used at Altria to finance its investments in Kronos Group. So this is the other one I was talking about. So Kronos Group, they also own a decent chunk of that company, and that company again is involved in other products, let's just say. So that's about they could acquire up to, well, it's 45% current, and then they had a option to acquire about 10% more for about $1 billion. So the issue with that is both companies are terribly down. Juul is not publicly traded, but Kronos Group is. Now let's take a look at Kronos Group. So 5 years ago, again, we can see, where do you think, all right, real quick, where do you guys think they bought Kronos Group? They bought Kronos Group around here. All right, this is the 2018 point. This is all the excitement. Since then, Kronos Group, and just, if you ever wondered, can CEOs be degenerate? Yes, they can. They can be degenerate investors as well. This is why management is so important for investors. They are your stewards of capital. So 87% down. So they made a bet. Yes, they made a bet on a certain product type. And I'm not sure if YouTube allows me to say exactly what they sell, so go check out what they sell, and you'll get an idea. A Canadian company, in the business of doing certain things. Anyways, so they made a bet, and they're not the only one, because we all know, well, I don't know if I've talked about Constellation Brands and what they've done, but yeah, they've also done some degenerate things too. And the point is, they messed up and they destroyed shareholder value for years to come. And that's going to haunt Altria for a very long time. So you're buying the company now, and what's done is done. What happened in the past happened in the past. And what we're seeing here is this write-off, this PE being so high is because they're writing off a decent chunk of the value, okay? Because again, it's a gap measure from the Juul investment. And again, we'll see that in 2022. But one more thing I want to highlight, because you may not have known this. So you guys know Bud Light, and owned by Anheuser-Busch, a very strong or very powerful, large company within the alcohol space. Well, yes, they own 10% of that. Yes, the cigarette company owns 10% of the alcohol and beer giant. Okay, so one more thing about this, and then we'll get into the valuation. I want to show you the write-off, and that is changes in fair value shown in the newest report. So Juul changes in fair value, we do see, again, they base it off of the income. So losses from equity investments and earnings per share, how that affected them. We recorded the corresponding adjustments to Juul to tax valuation allowance in 2022 and 2021. Again, that drawdown and how that effect has basically damaged or tarnished the value or the GAAP net income of the company. So just keep that in mind. And then we also want to highlight one other part. I said that was the last thing, but it's more of a discussion around the litigation risks. So what you might see is this company doesn't like to have cash laying around. And I think that's actually pretty intelligent because it's a very litigious environment that we live in today. And Altria sells a product that some people might have a problem with the products they sell. For good reason, I'd say, for good reason. And so that opens them up to litigation, of course. And one thing that you might want to do if you're open to all that litigation is perhaps think about or contemplate not having too much cash around and being a sort of, as best as you can, pass-through entity to your shareholders. Just give all the money to your shareholders as much as you can, as quickly as you can, and just be that cash cow. Well, that's what these companies are. Altria, British American Tobacco, these are cash cows for shareholders. They're in a very, very mature business line. Not much growth. The only growth that's coming in is from maybe a new business line, but more than likely just from price increases that we discussed earlier in this video. So when we get to the valuation, we kind of have to come to terms with that at the end of the day, this is going to be a cash cow and not much else. All right, so very quickly, we're going to kind of go over this, but what we're essentially seeing here is, I'd say, deep value kind of to an extent, okay? Because I'd be very weary. So I'm seeing some analysts actually come in, and I actually double checked this. There are actually some analysts that are actually predicting revenue decline to a decent degree in the coming years, and cash flows also decline. If you don't think it's that bad, maybe you're going to be a bit more optimistic, but I want to talk about that. And then shares outstanding have been actually declining for a very long time. This company has basically done buybacks almost routinely, but not too much. The main focus has been from the dividend all the way, dividend payments all the time. And as far as the dividend yield goes, it typically has a high dividend. Ignore that 43.69% dividend payout. That's not true. That's a thing going on with how the income is being recognized right now. But as far as cash flow goes, the company has been growing its cash flows pretty consistently as well over the period of time that we are measuring. Now, if we're kind of exploring from here, what is a sentiment score? It's a decent sentiment score for a company. It's pretty popular, I would say, among dividend investors, so it's coming back as a positive score there. When we look at the rankings here, we see underweight, equal weight, market perform, underweight, buy, neutral, and then the most recent ones, again, are all that actually pretty positive because we saw a bit of pressure on the price, and these are pretty much, for some people, they're going to think it's bargain basement. We've seen it as low, by the way. I want to mention that too. We've seen it as low as 37, and I think 35 at one point. Yeah, okay, 34, but I'm pretty sure I saw it at 35 as well. Well, of course, because it got there. But so it has been lower. It might actually get to those points again if we see a big or decent sell-off, if we see a lot of pessimism in the market as a whole, and you might see yields approaching 10%. That's when things, I think, start to get interesting if I were to get involved. I'm not really interested too much in getting involved. This is for a different kind of investor. But if you're looking for perhaps some sort of thesis around the terminal value of all the cash flows that will be paid out to you, because this is a declining business at the end of the day. There's not, again, that growth is not really there, and it's pretty much just a cash cow. There is a value to a cash cow, and you kind of have to come to terms with that as an investor. So what is that for you? I don't know. Now, they're not going to be growing at 12%, so get that out. But let's say they can somehow eke out like a 5%, and then we'll do 4%, and then we can do 3, and you can already see that we're not even there. But I don't have to change any of the other ones. So for me, I'd probably be looking for something under 40 for, that a decent margin of safety. But if I was, building a position, that I like to build it out over time. So these are prices that are close enough to kind of what I'm penciling out here that I might be enticed to eke out or build a small position here, and then kind of add as the market maybe gives me a better and better and better opportunity. So that's kind of my summary thoughts on Altria. Let me know what you guys think down below. Is this a company that you guys are looking for or looking at? And why are you guys investing in it if you are? Are you investing it for the dividend? Do you think that the market is just overly pessimistic on something like Altria? Or, alternatively, tell me, if you don't like Altria, is there another company that you like? Do you like one of the other cigarette sellers? And Why do you like that one? I've heard different arguments. So just give you an example. People like Philip Morris because they think International is a bit sturdier in this part. Because if you guys have been to Europe, you know, you'll see the vast contrast of the smoking rates for, you know, in American culture versus in European culture. I'm talking about, you know, Southern Europe. I'm thinking Spain, Portugal, etc. And yeah, so just let me know down in the comment section below. Again, thank you guys so much for watching. If you guys did like this video, let me know by hitting that like button. And if you guys want more videos like this, feel free, if you so choose, to subscribe, and then you can come back for more videos like this. With that being said, I'll see you guys on the next one. Bye.